dollar went up temporarily, right? It went up, and now it's collapsing. And a lot of times, if you look at a trader, if you trade anything, if you trade, you'll notice that phenomenon that oftentimes you get a head fake. You get a move in one direction before you get the real move in the opposite direction. It kind of gets people going the wrong way. It takes out some stops. It gets people, and that's what really we did. We kind of got everybody thinking that this is a big deflation trade, that you need to be in the dollar, you need to be in treasuries, and I think a lot of people who were leveraged up for my trade, right? A lot of people who understood these problems, and there's a lot of leverage out there. People who were long gold on leverage, people who were long euros or Aussie dollars on leverage, or other inflation plays, who, like me, who thought this is a disaster coming and it's going to kill the dollar. All those people got caught. They got caught leveraged, and they had to cover. And there was this giant head fake rally. And when it happened, a lot of people bought it. It's like football. You fake in one direction, and you hope the defense buys the fake, and then the running back's got a clear way to go. And so everybody went running in this other direction. Oh, it's the dollar. Let's buy treasuries. Let's get rid of our gold. Let's sell our commodities. And they're all lined up in the wrong direction now. And it never made sense to me. I knew it was all crazy. And so of course our clients at Euro Pacific Capital, all their accounts were getting crushed in 2008 because we're not short. We're buy and hold long-term investors, but we're all in foreign currency stocks, we're in commodity stocks, we're precious metals. All these things are going down. I wasn't worried about it. We didn't have clients on leverage, so we didn't have margin calls. We had opportunities to take cash reserves and to buy more of these assets because I understood that the real move, the much, much bigger move, was going to come up in the other direction. That was what we were setting the stage for. And I remember, too, a lot of the people who saw the dollar rallying, they were trying to justify it. They were saying stuff like, wow, this just shows that America was the first one into the crisis. We're going to be the first ones out. As bad as it is here, it's worse every place else. All this nonsense, right? The truth of the matter is it was just trading. It was just market noise. It was deleveraging. It was stop loss. It was liquidation, margin calls, redemptions, whatever it was. And it was speculation. That's all it was. It wasn't the real move. The real move is coming. Now the dollar is going back in the direction it should have. You're making new 52-week lows almost every day. The dollar index is back below 80. It's back at around 75.50. The all-time record low is about 70, which was set in earlier 2008, before all this stuff started happening with Lehman and Bear Stearns. And it's funny too, everybody seems to think that this crisis was caused by the government's failure to bail out Lehman Brothers. That was the one thing they did right. Everything else they did wrong. And I think for one moment in time they had some guts, and they launched a trial balloon. They didn't bail out Lehman, and when it turned into the Hindenburg, they all got cold feet, and now they bail out everybody. And one of the reasons initially that you had the strength in the dollar was there was a chance the government might actually do the right thing. Well, there's no chance of that now. So the dollar's just going to go down. And so once the dollar breaks through, this support level, I think it's all over. I think it's going to be like a hot knife through butter. And if people don't understand what's going on, look around the world at all that smoke, right? Where there's smoke, there's fire. Everywhere, is the dollar going to stay the reserve currency? Are there secret meetings going on with the oil exporters to dump the dollar? Look at the new reserves. Numbers coming out a couple days ago. The dollar was only represented 1/3 of net new purchases of foreign reserves. 2/3 were mainly euro and Japanese yen. I mean, they called me up. I couldn't do the show because I was in Hawaii. It was a TV show, but it was in New Zealand. They were doing a special on the dollar losing its reserve currency status. I mean, it's all over the world, right, that this is going on. And it is going to happen. And it's not going to happen. Most people think this is something that's going to happen in 10 or 20 years. No, it's not going to happen. It's going to happen during this Obama administration. I don't think there's any chance that we can drag it on longer than that. Because once the world realizes that once people figured out that Bernie Madoff was running the Ponzi scheme, nobody wanted to lend them any more money, right? They're figuring that out. They understand, right, that Bernie Madoff shouldn't be in jail. He should be the Secretary of the Treasury. They know this. And And what the world understands is, if the fact that the dollar is the reserve currency, that's what gives our politicians a pass. That's what lets them get away with all this. See, most countries can't do this. Normally, if you run big deficits, there is immediate consequences. Your currency goes down, interest rates go up, inflation goes up. There's a stop to it. We had this G20 meeting in Pittsburgh, and everybody agreed, including our president, that we need to address the global economic imbalances, that Americans need to save more and spend less. Fine, but everything that we're doing is the opposite of that. We're trying to encourage Americans to spend more. That's what all the stimulus is about, to get us to spend money, right? But that's the opposite of what we need to do, because what they don't understand is addressing those global imbalances is painful for Americans, because we have to rein in our standard of living. I mean, think about the Cash for Clunkers program, right? I mean, what was that all about? They wanted us to spend money, but think about it. I mean, this is a program only a politician can come up with, right? I mean, here we are, we're in debt, right? We're in trouble, right? The last thing we need to do is borrow more money, right? What is Cash for Clunkers? Cash for Clunkers is we're going to pay people to destroy working assets. In fact, we're going to borrow the money from China to pay people to destroy working assets. These are cars that are on the road. People are driving them. Because in order to qualify for the program, the car had to actually be in service. You couldn't just pull some clunker out of like a junkyard. It had to actually be working, right? We don't want to destroy things that don't work. We only want to destroy things that do work. And so here's a car that people owned that they were driving without any payments. They didn't have any car loans on these clunkers. They owned them. Let's destroy that. Let's give you $4,500 to pour acid on the engine so it'll never work. And then we'll pay money to scrap it and all that. Who knows what it costs to actually get rid of each of these working cars. And let's encourage you to go buy a brand new car that you can't afford. And you're going to go into debt to do it. So now, every month, you have to make a car payment that you didn't have before. This is great. This is really how to get out of a recession, right? It's like we got shot in the arm, and so the solution is, well, let's shoot ourselves in the foot too. Instead of trying to fix up the thing. Now, of course, we're probably going to have a bailout at some point for the people who can't handle these car payments. In fact, Chrysler was actually running ads that you went for the Cash for Clunkers. They had $1,500 rebates. You could walk into a Chrysler dealership with a clunker, walk out with a brand new car, and $1,500 in your pocket. People probably did it just for the $1,500. Maybe they'll just abandon the car. They're not going to make the payments. Just keep the $1,500. I mean, but these are insane policies, but they're all designed to do one thing: keep the music going, right? Keep the musical chairs game going. But it's going in, and the creditors know that they're not going to keep financing this. I mean, I hear this all the time. People say, "Well, the Chinese they'll never stop lending us money." Well, yeah, just like housing prices will always go up. Or internet stock price will always go. Why? What's in it for them? We say, well, they get jobs out of the deal. Well, what's so great about a job, right? I mean, the key about jobs is, productivity, what you earn, right? Everybody in the Soviet Union had a job. The problem is they didn't earn enough. They didn't earn anything. They lived, the communists gave everybody jobs. All the slaves had jobs. Big deal, right? There was no unemployment for the slaves. They always had work to do, right? That wasn't the problem. Right? The problem was that they didn't get to enjoy the fruits of their labor. Well, we've enslaved an entire nation. Well, we got the Chinese working so that we can consume, and they think they're getting the good end of the stick here. So that's going to come to an end. They know that, and the Chinese, it's not just. We always say, well, they got $1 trillion, right? They got $1 trillion. They can't possibly walk out of this trade, right? They have to throw good money after bad forever, because if they stop buying the dollar. And I even hear people on CNBC, I mean, they'll talk about this and they'll say, well, the Chinese can't let the dollar collapse. They'll lose a bunch of money. As if we don't lose anything, right? If the dollar collapses, it's China and Japan that have to worry. That's our currency. We're the ones that are broke if the dollar collapses. But instead of thinking about the $1 trillion, right? This is the trader, right? There is always an idea that, well, you don't want to admit that you were mistaken, and you're going to have this tendency to throw good money after bad, average yourself down. But at some point, every trader is going to cut and run. They're going to realize at some point that